is Marissa, and I'm so excited, like, really actually relieved today because a very, very educated lender, Mortgage Maria with Mortgage Masters of Texas, correct? I said
That's
all that
correct.
right. She's
Mortgage
with
Masters of
us.
Texas.
Yes, thank you so much for being with us because I just posted an episode of me talking about financing a home, and my dad was like, "Can I give you some like constructive feedback for your podcast?" And I was like, "Sure, of course." And he was like, "Could you like smile like just a little bit more?" And I was like, "Oh, well, Dad, I was talking about home loans and I was terrified." So
Yeah,
that's why I
yeah.
wasn't
It's a terrifying subject for sure. I mean,
right. Like
not
when you're not well versed in it, it can be kind of overwhelming to talk
it's
about.
intimidating for sure. And it's so funny because I'm very passionate about mortgages and I love anything financing related to mortgages. And so I can get into a conversation with a neighbor and I'm like way up here. And Mike's like, my husband, Mike, he's like, baby, not everyone's that passionate about mortgages and they might not understand those terms. And I'm like, okay, let me
No,
tone it
no.
down.
But I'm so glad you are so passionate and you're willing to talk to me today so we can talk through some loans. But before we get through any of that, I wanted to say first, how did you get involved in your business and how long have you been doing it?
Okay, well, it's a really funny story. I'll share it with you. I wasn't prepared to share it. I'm
Oh
not
no,
sure
I'm
it's
sorry.
podcast approved, but it is
Okay.
it is a funny story.
Go
So
for
I
it.
was really young when I bought my first house. I was 19,
Oh
and when I
wow.
purchased, back then the statements were called a HUD, right? And so I bought our house, and I looked at the statement, and on there was a number that was bracketed in, and in that during those times it was a large amount, and I was like, "What number is that? That's bracketed in?" And my real estate agent said, "Well, that's how much your loan officer made."
Mm,
And I was like, that's what I want to do.
I can see
So,
that.
yeah. So I went to Champion School of Real Estate for it was like a weekend class back then. It
Mhm.
was just like a Friday, Saturday class. And then after that, I just, back then it was super easy to get licensed. And then here we are 23 years later.
That's awesome. Well,
Yeah.
I'm like just so, so grateful that you're going to be speaking with us today all about Mortgage 101. So, what can you tell us about the different types of loans? I'm just going to let you go and I'm going to be a quick
Yeah.
listener.
Yeah, so there are several different products out there, and working with someone who is really well versed in all the programs is very important. So
Right.
the first thing that always takes place when you're looking to get pre-approved is you apply online. If you want to go out and look at a property this weekend, first thing is you must get a pre-approval, right? And when you get a
Amen,
pre-approval,
sister.
yes, always get a pre-approval first. But when you go to apply, one of three things could happen, right? So first is you could possibly obtain a pre-approval. You could get declined, or it could be that you get on a program where they find out what do you need to do in order to get pre-qualified, right? And
Right.
so that's the first thing that happens. And then after that, we look if you do get pre-qualified. When we're pre-qualifying you, we look into all the different programs that are available and see which one you best fit in. So for example, I had someone reach out to me yesterday, first time home buyer. He's looking for a low down payment. So we have four different options for first time home buyers,
Okay.
right? They all have different requirements, so you have to be familiar with each one of those four and which one do they fit best into,
And this
right?
is an FHA loan?
So there's an FHA loan and
Okay.
there's a conventional loan.
Okay. Right.
So within the conventional loan, there is a home possible, a home ready, and a home one. Okay. So home possible and home ready, they have income limitations. So, for example, here in Montgomery County, if you're a household of four, you cannot exceed more than, I'm going to round to like 75,000. I think it might be 72, but there are income limitations. So you cannot exceed that amount,
Okay.
right? So we know if we're working with a buyer who makes more than that, they wouldn't fit in that program, right? So then we would look at maybe the home one that doesn't have income limitations.
Okay.
So that's the first thing that we look at. And then also FHA is 3.5% down, and they do not have income limitations as well. So that those are the options for first time home buyers, both conventional and FHA.
Okay. Got it. And I know you work with veterans a lot. Can you
Yes,
explain VA loans? Because I feel like they kind of get a bad rap,
they
and I
really
know they
do.
need it.
Yeah, I'm not real sure. Maybe back in the day it was a little bit more difficult because back in the old days we had subprime lending, and sometimes it was just much better to put them into a subprime loan, which I know that's like a word we're not supposed to say, subprime, right? Like, that is frowned upon these days, but back in the day those loans existed. And so I think that maybe the complicated documentation from back then kind of carried on into today's way of thinking. And so, I think the veteran loans just get a bad rap, but you want to really work with someone who is comfortable working with them. And, they're a great program, and it's a benefit that our veterans have earned. So they really should take advantage of the benefit that they're entitled to. And so we just really try to educate our agents, sellers, buyers on if this is available to you. We really need to go down this avenue because it's the best program for you. And there are many reasons why. One is it's 100% financing, so that's always a plus, right? So
That's
we can,
amazing.
yeah, we can get the veteran in at 100% financing. And then also the seller can pay 4% in closing cost. So whatever the loan amount is, let's say it's 300,000, 600,000, whatever it is, times 4%, that's how much the seller can pay in closing cost.
And I have a question. Normally, they can't play more than 3%, right?
So on a conventional loan with less than 5% down, so 5% or less, it's 3%.
Okay.
If
Ha,
you
I
get,
knew
yeah,
something.
yeah, if you get into more, like if you are doing 10% down, the sellers
Right.
can pay 6%.
Okay, got it. So it depends on how
FA,
you have it down.
and yeah, and every program's different. So like FHA is 6%.
Hmm.
So for veteran loans, it's 4%.
Right. So that's a great benefit.
That is a great benefit. Yes.
A lot of so the I'm right now I'm going through the book Your First Home, and I'm going through it chapter by chapter. And Maria, like, I feel like you would love this book because I
Yeah.
love it, and just because it breaks everything down really simply for people who have never bought a home before, breaks down the process. I feel like you and I could have like a nerdy book club about this book. And
Yeah. Tell me
one
about
thing,
it.
yes, one thing that it kind of mentions is like you hear a standard like you need to save 20% down to put on your home. And that's like a big undertaking. So,
Yeah.
what would you like? Have you had a lot of that when people come to you for the first time and they're looking to buy a home where they're just like shocked that they don't have to put that much down?
Yeah, I mean, it's really a mortgage myth, right? Like,
Hmm.
and actually, it's so funny that you brought this up because I just did a post about this yesterday on our Facebook and Instagram. Is that this is a mortgage myth, and so many home buyers think that you have to have this significant amount to put down, but really you don't. I mean, we have programs available with as little as 3% down, and in some cases, 100%. Not every case, right? I mean, if it's USDA, you get 100%. If it's a veteran loan, you get 100%. If we're doing just a regular first time home buyer that's not USDA or VA, then it's 3% or 3.5% down. Well, I mean, that's really a great deal.
Right. And it can be a lot more, doable than you thinking, oh, I'm having to save up for like most of the payment of the home. So,
Yeah,
mortgage
absolutely.
month, mortgage myth debunked. So we
Yes.
got that down.
Yes, absolutely. And also another thing to keep in mind is that could be a gift, right? So the 3%, 3.5% down can be a gift. So you can get it through a family member, maybe an organization that helps with first time home buyers. There's different ways to get that 3% or 3.5% down.
So how would that work if I was receiving a gift as a down payment? Do they work with you and the title company? And how does
So we
that all go down?
So we work directly with whoever is gifting the funds. It has to be done a very particular way. Underwriters are very specific when it comes to documentation. You have to receive it a certain way. So we always tell everyone, don't move money around. We don't want any large deposits going into your account that we can't account for, right? So for the time that we are helping in financing, we always say, just don't move money, don't make any changes. We are in your life, in your finances, your credit, your income for those 30 days. And unless you have my permission, don't do anything.
Right. Don't even buy a lawnmower. Don't buy a
No,
piece of furniture.
nothing.
Yes, I've
No.
heard horror stories of, buyers coming to closing in their brand new car.
Oh my gosh. Yes, we've
Oh
made
my
some funny
goodness.
TikToks on those. No, unless you have Mortgage Maria's permission, do not do it.
Yes, absolutely. You have to be in close contact with your lender, your realtor, during this very like precious time frame where you're
Yes.
going to have with the right realtor and lender, you're going to be having great communication to let you know the do's and don'ts of what you can purchase and just what you need to be doing during that time.
Yes, yes, absolutely. So with gift funds, the way that it works, so let's say that you're gifted me funds. The way that it works is we have a gift letter, and you would complete it, and it states that this is a gift, it is not a loan. Okay? Because
Okay.
you cannot receive a loan under gift funds, right?
Because that would
So
mess up your debt to income
yes,
ratio.
right. And you really can't obtain new debt with using debt, right? And so a gift is a true gift. So if you're gifting to me, you're going to fill out this form. It's already a form that exists, and you basically fill in the blank stating that you are gifting these funds to me and what account you're gifting them from. Now you provide to me 1 month statement showing me that you have those funds available along with the letter. And then
Okay.
we get it approved through underwriting that way.
Okay. Well, that would be a great opportunity for anyone that could, anyone that has friends. Well, I guess does it have to be family? Could it be
It really
friends?
depends on the loan. So with conventional, it can pretty much be anyone who wants to gift it over to you. With FHA, it has to be a relative or significant other. There's different rules depending on the type of loan that you have.
Got it. Okay. Well, Maria, let's say that I'm a person who that sounds great, and I hope to do that for someone else someday, but I currently don't have anyone in my sphere that is able to do that for me at this time. Is there any kind of like down payment assistance programs that you recommend?
There are a lot of down payment assistant programs out there. We personally don't offer those, but there are several lenders who do. And so you can connect with a great lender that offers them. But I will tell you this, nothing is free, right?
Mm,
So,
right.
so anytime you're receiving like a grant, they raise your interest rate. And
Ah,
so you're paying for it every month. So, like, let's say your interest rate back when it was, 2.875, instead you would get 5.875. So the difference is hundreds of dollars per month added to your monthly payment. Not everyone can afford that, especially during this time where our rates are at its, highest in 21 years, right?
mm-hmm. Right. Okay. So that's a great tip as well. So when you're meeting with Maria for the first time and she sits down and you look at the numbers and maybe it's you need to save up a little bit more, that may be the better thing to do in the long run and
Yes,
she will help you do that. So it's
absolutely.
really great to know that you're working with somebody that is has your best interest at heart and they're not just looking to get you into the loan for their own commission. It's really like they want to do it for you. And I know Maria does a great job at making sure her clients are always in the win-win situation.
Absolutely. We love to make sure everyone's well taken care of.
Right. I mean, what's the point otherwise,
Yeah.
in the long run, it's not going to do you any good.
Yeah.
So, Maria, we've talked about FHA, we've talked about conventional, a little bit of VA. What else do I need to know?
Well, I would say USDA is a great program that is very difficult to obtain because you have to fit into this perfect box. But
Okay.
if you fit into the perfect box, it's a great program, right?
Okay.
So it's not for everyone. We maybe do just a few a year because they're so rare. But the individual has to qualify and the property has to qualify,
All
right?
right.
So the qualifications for both are so strict that most individuals do not fit into both boxes. But if you do, it's a great program. It's a government loan, low interest rates, 100% financing. I mean, it's just a great program for rural properties.
Oh, wow, that's really cool. Are there, like, I heard the pros. Are there any cons, you think, to this loan?
No, I mean,
Just
just
if you fit
how
in.
difficult it is to get in.
Right.
That's really the part that is, several will end up saying, hey, let's just go a different route because it takes a long time. And so actually, you go through underwriting, right, with our
Hmm.
underwriters. And then after you go through underwriting with our underwriters, you then have to go through underwriting with USDA underwriters. So
Oh,
it's
wow.
like, yeah. So they're difficult loans, but they're well worth it if you're not in a rush, if you qualify as the individual and the property qualifies.
Okay, awesome. Yeah, I don't know a lot about those loans, probably
Yeah.
because you said they're so rare. But
Yeah.
if I don't know, ask your lender about, ask Maria about it. Do I
Yeah.
fit into this category? And they'll tell you. And so
Yeah.
you can figure out
Yeah.
what's best for you.
Absolutely. And, most lenders offer them. So whoever your loan officer is, give them a call and ask them if you fit into that box.
Yeah. Do you fit into the perfect box? And does your
Yes.
home fit into the perfect box?
Yes.
And
Yeah.
you
And
might.
so,
I mean, I don't know.
yeah. Yeah. And sometimes you're not sure, right? So, as loan officers, we run everything through an automated system. And so we basically take it from one portal and then push it through another portal. It's like a stimulator, and it triggers like yes or no, right? And based on the calculations that so you want to make sure you're working with a loan officer that knows how to calculate. They know how to put your income, assets, all the things in there properly. So when it's communicating here, it's accurate information. So that pre-approval is correct.
Right.
Well, sometimes there are situations where we're unsure.
Hmm.
So if someone receives bonuses, commissions, they're not consistent, maybe a travel nurse or something like that, rare
Realtor.
situation. Yeah, realtor. Sometimes there's situations where you're not sure, like, are they going to allow me to use that income because it hasn't really been a full 2 years, or maybe they received more during this year versus this year. So what we do at that point, if we're unsure, is we submit it to underwriting as a to be determined address.
Okay.
So there's not a property that's been identified, and we don't want to
Hmm.
identify a property until we trigger that conditional approval. So it's different than a pre approval because a
You have
pre
to work
approval
with
is just where I look at it and I say, yes, we can do this. To be determined submission with a conditional approval, that means that I've looked at it and my underwriter has looked at it and they've triggered it back to me with a conditional approval, which is a good thing. So
that's
for
good.
those that are difficult loans, we do that ahead of time.
And in the end, that makes your offer end up looking a lot stronger because
Yes.
you can present it to the listing agent with full confidence. Hey, my buyer, or me, I'm the buyer. I have gone through these steps and I'm loan approved. Just we need to get through a couple of these steps during option you know, and then I'm going to be able to buy the home because sometimes, I mean, not with Maria, but I've been helping Charla on listings and we get to just the final stages of closing and they didn't obtain funding. Um, and that's so bad because not only the buyer doesn't get the home and the seller has to go back on the market after being under contract for 20 days, sometimes 20 plus days, so it makes the whole process start over again. So that is
I
a
don't know
great
how that
thing.
happens. Yes, that is.
It's
Yeah, I've
upsetting.
heard horror stories, trust me, I've heard the stories, but thank God we have never been in that situation. So,
Well, it seems like you're doing everything you can to make sure that you're not put in that situation. So that's just another reason why you need to be interviewing lenders when you are out trying to find a loan. Um, Ask them these questions. What steps do you take to get me pre-qualified? They should know the answers. If they don't, interview a couple more people. So I always say to go back to your realtor and ask them for the recommendations on lenders because it's very likely they work regularly with at least two.
Yes.
And you want to make sure that you're working with the best one.
Yeah, absolutely. And also keep in mind if a lender is promising you the world, right, versus someone like me, I'm very honest. I'm going to tell you exactly what we can do. And my offer may not be as pretty as someone else's, right? Because I'm honest up front versus like going very deep in with someone and then finding out later that they're offering exactly what we offered in the beginning, right? And so that happens a lot, so just because someone's, giving you a beautiful offer doesn't mean that that's what you're going to get. You want to work with someone who has enough experience to be able to tell you everything up front.
Right. And Maria, I'm sorry if this is a bad question or it's like not professional, but what are you against we recommend people shop rates, right, to our clients. Would you be against if they come back to you and they go, "Hey, this is what someone else came up with. Can you explain it to me?" Or is that bad business? Like you shouldn't be sharing that among different
Well,
lenders?
this is the thing is when I feel like as a lender, when you're shopping, we don't know if you're comparing us with an honest loan officer or an experienced loan officer who knows what they're doing. I can tell you this. I've had several buyers end up back with us after they received a better deal somewhere else and then they got deep into it and either that loan officer had no clue what they were doing and they were promising the world and so obviously it looked better than mine, right?
Right.
But then it turned into a disaster. We had to start all over. They had to come with us and start back from the beginning. um, that's happened. I've had other realtors tell me how terrible the whole thing was, and at the end, they ended up not getting what they were promised. And so, shopping around is good only if you know that that individual is a loan officer for a long time, and you're comparing apples to apples,
Yeah.
right?
Right. Absolutely. That makes sense. Obviously, if you don't know that loan officer how experienced they are, it's hard to compare if they just show you a one sheet like this is what we
Right.
told you.
Yes.
Kind of hard to go off of. So a little bit of research, a little bit of gut instinct will go a long way in
Yeah.
this process. And so I'm just trying to inform all these people who've never purchased a home before, what to expect. So, Maria, what is a piece of advice that you would give to a first-time home buyer about loans?
Prepare ahead of time. If you know that your lease is up, in 6 months, start talking to me now because we need to look at everything ahead of time. Is there anything that you can do in these next 6 months to be better prepared? So that's something that you definitely want to be telling your buyers when they're contacting you. We just had someone the other day say, I'm just going to renew my lease. And so we're like, okay, great. That's fine. So now we have a year to work
Right.
on these things. So let's lay this out. Let's look at it and see where we can get you in 12 months so your buying power at that time.
Great advice. And be prepared and also don't be scared to reach out to the lender to figure out where you are. Sometimes I feel like it
Absolutely.
can be the scariest step is just putting yourself out there because you feel like maybe if I don't qualify for a home right now that I've done something wrong or I'm failing, which is just not true. Just everyone's circumstances are different. And if you have a home ownership dream, you can't make that happen without taking the first step. And Maria's not going to shame you. I'm
We're
not
not
going to
scary, I
shame you.
promise.
No, we're just here to help. And,
Yes.
the right people that are here to help will help you and they're not going to shame you. So don't be scared. You can do it.
Absolutely. Another great tip that I would say also is a lot of times if someone has collections or charge offs, they're like, oh, I'm going to pay all this off. No, don't do that. Unless you're advised to do that, do not do it because that could actually make your credit scores worse. So I would say definitely talk to a mortgage professional or a credit specialist before you make those decisions to just do that.
And that's because of like the debt to income
No,
situation
it's
or
because
how?
so the credit companies, the way that they report your credit is sometimes when you pay it off, it brings it back to the forefront, right? So it
Oh,
actually worsens your scores versus making it better. So that's why sometimes, in some cases, it's better to dispute, not pay, right? And so you hire a credit specialist to do those things. Now, I am not a credit specialist, but there are several amazing credit specialists out there, and you'd want to make sure that you work with a good one that has a great reputation.
right. And like you could find one of those maybe through a lender, through your realtor, someone. I would go off of um, referrals in that circumstance.
100%.
Make sure it's someone that someone knows and trusts that you can. That's because that's so important. Your credit score is a big deal, and you don't just want to hand off that responsibility to anybody. So referrals are best. And Maria, just thank you so much again for being here with me. I feel like totally at ease. I feel like I've been smiling most of the time we've been talking because I'm so grateful that you're speaking to this. And I'm gonna start incorporating a question. You're the very first one that I'm doing this with, so exciting, right? I want to
It's
start
very
incorporating.
exciting.
I want to start
I love it.
incorporating a personal question towards the end of the interviews when I have guests on, and I just want to ask, what is a charitable organization that you're really passionate about, or that you can promote to our listeners?
Well, there's quite a few. My husband and I are really big into nonprofits, mainly for veterans. We love to do a lot of work with our veterans, but actually, this month we are working with the MILA Foundation, which is an organization my husband and I founded back in 2015. So we have a daughter who was born in micropreemie, and she passed away in 2014. So in 2015, we started an organization called the MILA Foundation in honor of her. And what we do is we basically just bless families at Texas Children's Hospital through different ways. So we have a lot of different programs that we offer there. And one of the things that we do every August for her birthday, her birthday is August 22nd, we have a book drive. And so we collect books all through the month of August. And then August 22nd, we go up to the Texas Children's Hospital Library and we donate them. And now they do have to be new books, but let me tell you, it's such a blessing to be able to do that each year. And the reason why is this is a private library. This is not a library that's open to the public. You can't just walk in there. You have to be a patient, sibling, or parent of a patient, right? And so for us in 2014, when Mila was in the hospital, our daughter Ava was 2 at the time. And so I wanted to spend time with Mila, but I couldn't do that because Ava wasn't occupied, right? And so she wanted mommy. She was only 2. She wanted all of my attention, but I wanted to focus on my daughter Mila. And so the only way that I could do that was through these book donations and library donations. So the librarian Catherine, who's there, she actually came to us. She brought Ava a DVD player with DVDs, books, coloring books, and that gave me 30 minutes, an hour if she was watching a movie to be able to focus on Mila. So, because Ava was occupied. So, to be able to give that gift to another parent is a beautiful thing. So, it's something that we know we can't take away their circumstances and what they're dealing with, but we can give them a moment that they'll remember forever.
I love that a lot. And how, if someone's listening to this, maybe they're listening to it way in the future, what's a good way for someone to donate to Mila's foundation?
Well,
What's
there's
the best
different
way?
ways. So if you want to donate a book, we do have a Dropbox location. So you can go to our Facebook location. It's the Mila Foundation. So it's the Mila Foundation, and Mila is MILA.
Okay.
So you can go to our Facebook page, and it's always updated on what we're doing. And actually, we have a blood drive that's going to be coming up in October, which actually we're very passionate about as well because of blood donations, Mila lived for 2 months, and we were able to meet her and she was able to meet us, and we had some amazing moments together through her 2 months of life. So we're forever thankful. And so we do have a blood drive coming up in October as well.
Well, that's wonderful. I'll be sure to include the MILA Foundation link in the show notes and all the social medias so people can follow and help support. And thank you so much for sharing that. And I hope to help any way I can with it as well. That sounds wonderful.
Thank you. Thank you. Well, thank
Yeah.
you for having me here today.
Of course, yes. So anything else, is there anything else I forgot to ask? Anything else we need to talk about?
No, I think we covered it. I mean, who knows? The listeners may be like, "Oh my gosh, this is too much information."
Well, that's the thing is, I've kind of been talking about this whole time, like you need to plan, you need to plan, you need to have a plan, you need to educate. And for the most part, yes, having a good knowledge of a base level knowledge is good. That way, when you go and you're interviewing your lenders or your realtors or you're looking for a house, you have a basic understanding of what to look for. And I think you did just an amazing job of explaining all of that. And again, so, so grateful to have you on. And I love ya. And
Yeah, thank you.
thanks everyone for listening. And I'll see you next week.
Yeah.
Bye.